Hello, everybody. My name is Lee Schwartz, and I'd like to welcome you to our webinar today. Our topic is PPP funding forgiveness and its relationship to employee retention credits. What's in play? So we have a lot of content to cover, but before we get started, I just want to take a sec and say a couple of quick words about SVA. Those of you not familiar with us, our vision is to remain independent, and our goal is to continue serving the same clients we have since 1974. And that's closely held in family-owned businesses and nonprofits. And we do that by working collaboratively throughout the year with our clients in a consultative way. So with that in mind, we've really strived to provide more information and assistance over the last 11 months than anyone else. We've conducted now 40 webinars and have had over 6,000 attendees. When the first PPP loan program was launched, we provided guidance not just to our clients, but to anyone with questions, because the stronger your businesses are, the stronger SVA is. So we are going to try and leave a few minutes at the end for Q&A, and I know there will be a lot of Q&A. If you have a question, open up the chat box in Zoom and submit it there. If you're a client and your question doesn't get answered, we'd encourage you to reach out to your SVA contact or our speakers today. If you're not a client and you have questions, please reach out to me and I will get you connected to a subject matter expert at SVA who can help and get those questions answered. Over the last 11 months, we have found that there are just a ton of businesses who aren't getting timely or knowledgeable advice from their CPAs or advisors, and we're happy to step in and help. So please share this information with others, share our contact details with others. Please feel free to share the link to download the recorded webinar with others as well. So we're getting the band back together. If you've attended any of our past PPP webinars, you're already familiar with Nancy, Dan, and Eric. But Nancy is a principal with SVA and leads our Management Advisory Services group. Dan Glomsky is a CPA and principal and leads our valuation practice. And Eric Trost is a CPA and is one of the leaders of our tax practice. So I will be back towards the end for the Q&A, but Eric, I'm going to let you take it from here.
All right. Thank you, Lee. We're going to get started with a recap. We're going to talk a little bit about the first round of the PPP, talk about where that was, where we are now with some of the changes in the law before we move on to the second round with Nancy. Going back in time, first round of the PPP, this was a provisions of the CARES Act that made this available. So back in March of 2020, and most of these applications would have been done sometime in April or May of 2020. The application was 2.5 times, or the application amount was 2.5 times of the 2019 monthly wages. There was a covered period of 8 weeks or 24 weeks that you could pick. There was a 60% rule, meaning that 60% of your funds had to be used for payroll, and the other 40% could have some limited uses. The maximum loan was $10 million. This was a loan that you applied through with a bank. Recall that there was another loan out there, the economic injury disaster loan, I think it was, that you applied with the SBA. This one you applied through your bank, okay, which is the same place your forgiveness application is going to go if you haven't sent it yet. And you made an attestation when you did this loan, and that was current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Okay. I'm telling you this now because we're going to reference it in a couple of slides, but we'll go on to the next slide now. So when the first round was applied for, some rules came out, and one of the things that came out for the forgiveness was that there was going to be a simplified form for forgiveness for loans under $50,000. So back when the forgiveness application started, there was a form to do a simplified forgiveness for loans under $50,000. Then there was a couple more complicated forms. One form was to apply for forgiveness if you did not have a reduction in employees or wages. And then another form was forgiveness if you did have a reduction in employees or wages. So all those forms exist out there and existed up until the time of changes. There were a couple changes to them that we'll get to. But if you have not applied for forgiveness yet, those are the forms that there's been some updated forms to use for that. There's also been a slight change to those who applied for a loan and got a loan over $2 million. There is a needs questionnaire that also has to be filled out. And that needs questionnaire is something that came out in about November and really applies just to companies that received a loan for over $2 million. The due date for the application for forgiveness. We get this question quite a bit is, well, I don't want to miss it, right? You've got 10 months from after your covered period to apply for loan forgiveness. After 10 months, payments on the loan become due. So if you have not applied for forgiveness within 10 months after your covered period, then payments on the loan become due. That doesn't necessarily mean you still can't apply for forgiveness. It means that payments now you have to start making payments. So when would that typically be? The payments, if you applied for a loan back in April and your covered period ended in October, then your due date for applying for forgiveness would be August. If you applied for a loan back in April and you only took an 8-week covered period, then your due date for applying for forgiveness would be about April or May. So keep that in mind when applying for forgiveness. You don't have to do it yet, but the times are coming up when you do want to have that forgiveness application in if you haven't done it yet. Turning back to the loans for more than $2 million. There's this new form out called the 3509 I referred to. That form asks a lot of questions regarding what they call needs-based, if you needed this loan or not. And it's giving the SBA a look into whether you could attest that you needed the money back when you took the loan out. This 3509 form, or in the case of a not-for-profit, form 3510, asks a number of questions up front that say, what was your sales in the second quarter of 2020 versus 2019? What was your cash position? What kind of things did you spend cash on during the time that you would have gotten the loan? So all these questions are geared to the SBA, I believe, to try to filter what companies they're going to look harder at that took a $2 million loan or not, but also know that the SBA can look at any loan, not just those over 2 million. They can look at loans under 2 million and they could ask these same types of questions. Having said that, understand that there is no backwards looking test for the application of forgiveness on this first round loan. The test is really at the time you took the loan out, did you have an uncertainty, business uncertainty, that made the loan necessary? And even in the SBA's question and answers, they specifically point that out. And so included on this slide then, if for those busy reading it, what I really want you to do is just take a look at the highlighted sections. And I'm not going to read this all to you, but just take a look at the highlighted sections. And in fact, the second highlighted sentence, the certification is required to have been made in good faith at the time of the loan application, even if subsequent developments resulted in the loan no longer being necessary. So really, there is no backward-looking test here. And even though the SBA is asking questions on this form 3509 that appear to be a backward-looking lens and test, I think this is just being used to filter out who they want to look at harder. But the test really comes to at the time you took the loan out, forward-looking, you experienced this kind of uncertainty that made the loan necessary. So I think it's important to understand that and remember to frame your 3509 and any subsequent questions that would come up with the SBA is educating whoever you have to talk to at the SBA about this, that this is what our thought process was at the time and why we felt the loan was necessary. So I wanted to get through that. Again, the wording is all here. This is from the SBA site, but know if one thing you take away from this whole paragraph is that the test is at the time of the loan, there was uncertainty that made this loan necessary. You can go on to the next slide. So there have been some changes to the PPP, the first round of the PPP, since the CARES Act, and that was the the CAA Act, which really was signed by the president in December. There were the couple changes added some beneficial items to the first round of the PPP, and we'll see they also added the second round of the PPP. One of the changes is that the expenses now can cover not just rent, utilities, transportation, but actually they opened up the amount of expenses that could be used for operations, property damage caused by public disturbances, supplier costs, worker protection costs. So there's additional expenses that are allowed for PPP funds to be used by. However, there's still the 60% rule. The 60% rule is that 60% of those PPP funds must be used for payroll. Next slide. There's also a simplified forgiveness form for under $150,000 now. So earlier I said that was under 50,000, and now I'm saying it's under 150,000. Okay, this is an example of the rules changing. I want you to understand where this came from. We had a little internal debate on whether we put these both numbers up or not, because we don't want to confuse people. But I do want people to know there was an evolving history here on the 50,000 and 150,000, because you're going to read things out on the interweb that say things like, well, it has to be under 50 to use this form. And now here I'm telling you it's over 100 or under 150, not under 50. What happened was when the rules changed, that simplified form raised the limit of the loan to 150,000 to get the easy form forgiveness, or this, I'll call it the simplified form forgiveness. So now if your loan, first loan from the PPP was under 150,000 and you have not applied for forgiveness yet, you can use this new simplified form. And what's great about it is there's not a lot of data that has to be provided. There's attestations you have to sign, but other than that, there's not a lot of data. So you can send this in pretty quickly to get your forgiveness process started. For those of you who sent in an application already and you were under 150,000, that application is still out there. For those of you under 50,000, same thing as before, you can use this simplified form. Another change that Dan's going to talk about later is the employee retention credit, which is now available in 2020. Originally, that credit was not available in 2020 if you took a PPP loan. With the law change from December 27th of 2020, with that law change, now the employer retention tax credit is available even if you took a PPP loan. And so Dan's going to get into the importance of that. And the other thing that changed with the law is that the PPP income is not taxable, but the expenses that you use the PPP for are also deductible. Every state is going to have their interpretation of this, and Wisconsin has its own interpretation saying that those expenses of the PPP use are not deductible. However, there is a bill in the legislative process of Wisconsin to make these PPP expenses deductible again, at least for Wisconsin. Again, each state's going to have their own rules, and those rules are going to change over time. We'll have to wait and see what Wisconsin does and if they're going to allow these PPP expenses to be deductible. That's the wrap up for what I want to talk about on the first round. I'm going to turn over to Nancy to talk about the second round of PPP available.
Thanks, Eric. First of all, I want to say that I wore red today in honor of Women's Heart Health Month. So all you women on the line, stay heart healthy. So Eric, before I get into my part, I just want to bring up in the comment that you made when you talked about this 3508 application for 150,000 for the draw. You will now see as people fill out those forgiveness applications, you will use the exact same application, but there's two boxes on the application. One indicates this is my first draw. One indicates it's the second draw. So I think, as Eric mentioned, as people are searching for things on the internet, things are going to come up that are expired. So I think it's important to reach out to whoever you are looking to guidance for on some of these issues, because there are still old applications circulating out there. There's old information. So hopefully we can help clarify some of that. So on to business. So the second draw of the PPP, or sometimes we call it round two, new PPP, whatever you want to call it, it is essentially the same program. It's just a second draw. So they opened this program up on, or the second draw application open on 1/11. And for 1/11, it was for those of you that did not receive a PPP loan prior. So remember that first draw expired and then they opened it back up again on 1/11 for the people who were receiving a PPP for the first time. If you are a second round applicant, then the process opened up to you on 1/13. So for anybody from 1/13 to 3/31, it does expire on 3/31, you can go in and apply for the second round. So I just want to point out, because there's been a lot of news out there about how maybe this was set aside for larger companies. And I just want to point out that in this second draw, they did set aside $25 billion for second draw recipients who had less than 10 employees, and for any loans that were under 250,000 for an eligible borrower that was in a low or moderate income neighborhood. So they're really trying to reach out to the people who really need this money. And this is one of the ways that they did this, is to set this money specifically aside for these businesses. So as far as eligibility, as Eric indicated, there were some changes in the eligibility. So now the eligibility is 300 employees or less, where you remember the first one, it was 500. And one of the criteria is that if you did receive this first draw, you have to have used or expect to use all the funds. Now, I want to clarify something here because this has been confusing to people. So if you did not receive 100% forgiveness for a reason, maybe you got too much the first time, because remember, rules were changing the first time. And so they put a cap on owner's comp that it had to be equivalent to 2019, and it was capped at 20,833. So if for some reason you got more in round one than you were entitled to, and you did not receive full forgiveness, that does not disqualify you from the second round, because you are still using the money on eligible expenses. So I think that's just important to point out there. The other thing is there's this 25% decline in revenue when you compare a quarter to quarter. So let's say you're comparing quarter two, 2020 to quarter one, 2019. You have to show a 25% decline in revenue. So I've also gotten a lot of questions that what is defined as revenue. So I'm actually going to read you something right off of the SVA website. Don't usually like to do this, but I'm going to read it to you. It's defined as all revenue in whatever form received or accrued in accordance with your entity's accounting method. So that means if you're a cash basis client, you keep your books on a cash basis, it's your cash basis revenue. If you're accrual based, it's going to be whatever your accrual based revenue is, even if you have accounts receivable. It includes sales from products, services, interest, dividends, rents, royalties, fees, or commissions, reduced by returns and allowance, but excluding net capital gains. So there's a lot of revenue in there. So sometimes you're going to have to look at, if you have financial statements where you have other income or expenses below the line, you may have to take some of that information and move it up to your revenue. This does not include forgiveness from any SBA loans. So if you receive forgiveness on your first round of PPP, or you had 6 months of an SBA loan paid that you had sitting in debt forgiveness income, that is not included in your gross income. So something to remember there. Otherwise, how you calculate what you're entitled to is very similar to what you did in the first round. It's going to be 2.5 times your average monthly payroll. And again, that's capped at anyone at $100,000. So, and any shareholders is going to be capped at what 2019 W-2 income was. You can use 2020, or you can also use the 12 months immediately prior to the application. I think for most people, they're going to use 2019 or they're going to use 2020. However, if you received a first draw and you use your 2019 data, you can include that same information, but keep in mind that your loan might be a little bit higher in this second round, because as everyone recalls, in the first round, it was group health insurance was included. They have now expanded that to say that that can also include life, disability, dental. We didn't know that in round one. Either it wasn't clarified or it was only group health, but I don't want people to automatically use the same information when applying for round two, because you could be shorting yourself a little bit there. So keep that in mind. Also, for restaurants and hospitality, you can use 3.5 times your average monthly payroll. So again, really trying to help those businesses that were hit hard in this pandemic.
Nancy,
Yes.
I want to clarify one thing on this 25% revenue reduction that I've gotten questions on. It truly is a cliff. So if you're $1 over the 25%, you do not get any second draw PPP. You get zero. If you're $1 under, you get a full amount of PPP. There is no vesting into the PPP second draw. It's either zero or you get full ability.
Eric, you are 100% correct. However, I do want to say, if someone is that close, I would encourage them to reach out to us and talk through it, because remember, it is reduced by returns and allowances. So I want to make sure that people aren't just taking all of their gross revenue, and if they're so close, but they don't meet it, I think we should really be looking at your financials to make that determination. So we're willing to help people take a look at that just to make sure that everybody qualifies. One of the things that I wanted to bring up, actually, that I didn't in the previous slide, is nonprofits are also eligible for this PPP. And in the first draw, it did not include 501c6 companies. It was only 501c3 companies. In this second draw, they have included 501c6 companies, which are basically associations. There's a little bit different criteria. And even though it is your first draw, these entities still have to use the 300 employee rule. They cannot fall back on the 500 employee rule. So a little bit differences there. I want to point out there's a $2 million maximum for this loan, and there are some affiliation rules. And these affiliation rules, I'm not going to go into a lot of detail on them because they can get a little bit complicated. But I did want to mention is that when you're doing these affiliation rules, you have to add the gross receipts to all the affiliates in the 25% reduction determination. So you cannot look at these entities independently. So just an important note, and again, feel free to give us a call if you want to talk through this. So Eric mentioned, and I'm just going to repeat and maybe give you some examples on some of the qualified expenses that you can use in the second round. So again, payroll costs, same as before. However, remember, we're including life, disability, and dental insurance along with the health insurance, mortgage, interest, and rent. One of the things that had come up later on in the application process is if you are paying rent to an affiliate, if it's a self-rental property, the rent deduction that you can use, or the qualified expense, is only going to be up to the mortgage interest in that property. So something to be aware of. Utilities, telephone, gas, electric, water. And then these worker protection costs due to COVID, these are basically going to be any plexiglass barriers that you've put up in your facility, anything you need to keep people protected, that's going to be included. As Eric alluded to, the property damage due to looting and vandalism, and it's got to be uninsured. So anything that you got insurance proceeds for, you cannot double dip on that. So it has to be only things that you were not reimbursed for by insurance. And then supplier costs and expenses for operations. So what does this include? Some examples of this could be, it's going to be anything that you needed to keep your company going. And so if you were like, in our situation, a lot of us went remote when the stay-at-home order came in place. Any of those expenses that had to assist us to continue doing business remote, those could all be included. So if we had additional software, if we had to do some additional firewall expenses or anything that we need to keep your operations going, those are also going to be allowed as a qualified expense. So the loan terms, just want to remind everyone what the loan terms were. They're the same as the loan terms in the first draw. However, if you received a loan after 6/5/2020, it was a 5-year maturity and not a 2-year. So if you were one of the first ones to get your loan in early 2020, and if you're still in your first round, again, it's either going to a 2-year maturity or a 5-year maturity. There is loan deferral for 10 months on the loan payments. And then I also want to point out that, remember, in the first round, as Eric said, the EIDL grant was reducing your loan forgiveness. And then they came back and they said, no, we're accepting that. If any of you had already received your forgiveness, you will be getting notification on that additional forgiveness. The SBA is sending out documentation to every bank, and they're paying off those loans. And then your bank will be contacting you to let you know that that loan has been paid off. In some cases, you might have to work out with your bank if there was a payment already made on that and getting that payment returned. There is also no personal guarantees or collateral needed for these loans, and the bank is not taking any loan fees out on these. So I think the biggest thing with this second draw and with applications for forgiveness that are happening right now is that we are seeing a very, very delayed response time from the bank and the SBA on the forgiveness. So we know that when you're applying for the loan, we know that you are going to have to prove this 25% reduction in your revenue. And that's going to include giving them financial statements. If you do not have an audited financial statement audited or prepared by an accounting firm with a report on it, you are going to have to sign off on every page of that financial statement, attesting that that information is correct. So that's going to be imperative that you do that when you're applying for the loan. Now, when you're applying for forgiveness of these loans, we are seeing a lot of error codes being kicked back from banks right now. And some of them were really, really struggling to figure out what these error codes mean, why they're getting kicked back. And in some cases, the banks aren't even aware of it. I did hear that the SBA was supposed to provide guidance to banks on what these error codes are and how to solve this issue. But I just want to mention that we're getting a lot of pushback right now on rejections for forgiveness applications, delays in forgiveness applications, even the applications for round one. In fact, many banks right now have suspended taking applications until I believe it's the last week of February or the first week of March, because they're adjusting their portal. As I indicated earlier, the application has, this is draw one or draw two. I think they're trying to get their portals changed to reflect this information. We have also heard, and again, I don't have any concrete evidence on this, but there's been some rumors that they're combining amounts from loan one and loan two and capping some people. So again, we're looking for some further guidance from the SBA on that to see if there's going to be any caps beyond what we already know in the $100,000 wage or the $2,833 per shareholder. And then, as Eric pointed out earlier, we still have to be cognizant of this economic uncertainty in this second draw. Even though we know that there is a mechanical test, 25% reduction in receipts, we still have to understand that the SBA could come back and look at this, and they want you to prove that you had economic uncertainty and that this loan was necessary. So again, I think having some documentation is going to be helpful. I also know that the SBA is going to be randomly auditing clients under 2 million. So we know everyone over 2 million will be looked at. We know that there's going to be some random audits under 2 million. So again, I think these are just things that you need to be aware of and have appropriate documentation. And I think that's about all we have to talk about on the second round. So with this, I'm going to kick it off to Dan for the employee retention credit.
Excellent. Thank you, Nancy. And just to be clear, you know, what Nancy said with respect to a lot of the banks or a lot of the delays in the foreclosure, the forgiveness, you know, part of that is, some of that is bank specific and some of it is the SVA in that process. So, you know, some people will get forgiveness pretty quickly and others, it seems to take a little longer. And sometimes it's a result of the bank that they're going through. So be kind of mindful of that, but be prepared. And as Nancy said, document, because, you know, these things could be looked at a year or two from now. We want to really kind of set our narrative today and be ready to go if they ever were to come ask some questions. So what I want to talk about is really the thing that I really believe is another really great opportunity for some cash generation or government support. That is called the Employee Retention Credit, we refer to it as the ERC. And kind of talked about this before, so I'm going to go over these slides pretty quick from the perspective of the background. But I want to kind of go into a little bit deeper as far as, you know, how you maybe qualify and what kind of things we got to watch out for when we're making that application. Because there's some decisions that have to be made in that process. We want to make sure that you understand them and identify them. So the first one, we have the 2020 opportunity. And this ERC is kind of broken up into two kind of categories, a 2020 rule and then a 2021 rule. So for the most part, the facts are somewhat the same, but our thresholds and the amount of credit vary by year. So for 2020, now that the law has been changed so that if you participate in the PPP application, you're also able to now apply for the ERC. That was a rule change. So you'll see some things on the internet that might say you don't qualify for the ERC if you have a PPP loan. That is not correct. That is old information, and you just want to move past that and understand that if I apply for the PPP loan, I can also apply for this ERC. And for 2020, it's a 50% test if you have a greater than 50% reduction in business and or a full or partial shutdown. And there's a lot of opportunities even in that world. But if you're only relying on the full and partial shutdown provision, then it's only those wages that are for that period of time. And another thing you want to focus in on is the number of employees. So if you have a full-time equivalent employee of 100 or fewer, then all wages of employees qualify. If you have more than 100 employees under full-time equivalent rules, then it's only for wages paid to individuals while they were not working. So if you were furloughing somebody but continued to pay them, you know, then that would be what would qualify if you have a greater than 100 full-time equivalent employees. So that's for 2020. You'll see in 2021 that threshold is increased, again, creating the opportunity for a lot more people. Eligible wages, we're looking at wages, we're looking at health insurance costs as well. So those are important variables there. And then the credit claim is 50% of the qualifying wages up to $10,000, including health insurance. So if you pay somebody $8,000 and $2,000 for health insurance, that gets you to the $10,000. Your credit on that particular employee is up to 50%, so $5,000 credit. And those are credits claimed on a Form 941 for the most part, but you do have the ability to get some advance payments using Form 7200. So let's switch over to the 2021 situation. And you'll see the eligibilities increase from 100 employees to 500 employees. So again, makes a lot of people eligible for this. And again, the 2021 is only for 2021 wages, right? So we've left 2020 behind us. We're now totally dealing with 2021. But if your business has 500 or fewer employees, and you meet the full or partial shutdown of a business, or you have a 20% reduction in your quarterly revenue compared to 2019, you could qualify for the ERC. If you have more than 500 employees, again, you may be eligible if you have full or partial shutdown or a 20% reduction, but it's only for the wages you pay to individuals while they were not working. One thing we want to highlight in this perspective, and also kind of relates to 2021 as well, but in a different threshold. The 20% reduction in revenue you look at the first quarter of 2021 compared to 2019. And if you have a 20% reduction, and obviously we're not through the first quarter, so we don't know that yet. But if we have a greater than 20% reduction, then we're eligible for the ERC. Same thing for the second quarter. Those are the only 2 quarters at this time that are eligible for the credit. We can use the fourth quarter of 2020 as an option. So if our 2020 fourth quarter compared to 2019's fourth quarter is 20% or greater reduction, what happens is we now qualify for the ERC, and that qualification applies for that quarter. So the fourth quarter of 2020 is allowing us to be eligible in 2021. The little twist on this is we're going to be careful that I'm not kind of misleading anybody. But if we go and say, well, our 2020's reduction was 20%, so to requalify in the fourth quarter of 2020, and the answer would be no, not unless you were at the 50% mark leading up to that quarter. And so if you're in that situation, that's something we want to kind of explore a little bit further. But the 20% reduction relates to the 2021 eligibility and not the 2020. Just to add a little more color to that, for 2021, you have to have a 50% reduction in a quarter compared to 2019. Once you have that 50% reduction, you are then eligible for the credit, and you would continue to be eligible for that credit until your gross revenue exceeds 80% of your 2019 numbers. So you continue to be eligible. So it's possible you might have a 20% reduction in the fourth quarter, but you really would have had a 50% reduction in the third quarter to allow that eligibility to continue. Again, a little bit more technical than probably needed, but just know that we're thinking of these things. We're trying to look for opportunities for people to be able to claim these credits. And for 2021, the credit is now 70% of eligible wages, right? So we have how much we pay somebody plus their health insurance up to $7,000. And again, the form that we use to claim these on would be the 941. And again, we can get an advance payment using form 7200. So what I really want to get into this is really kind of what is our opportunity in this whole scheme, because what we want to do is look at how much ERC money I can get and how much PPP money I can get. The reality is you can't use the same wages for both programs. So we kind of have to be somewhat strategic in how we go about this. But then there's also rules that at this point, we're kind of following what we believe are the rules, and there might be tweaks to them that either open it up. I think we're taking a more conservative approach and still trying to find a way to optimize using the information that we do have. But there is some uncertainty in this whole thing. Again, we read a ton of things, we look into things, and we're trying to be as strategic in this as possible. But I want to run out 2 scenarios. The first scenario, and again, we're just talking about one employee. If I had one employee that earns $30,000 a year, that's $7,500 a quarter that I'm paying that employee. I'm assuming no health insurance just to keep things simple. And if I'm applying for my second round of PPP money, I'm applying for $6,250, which is 2.5 times my monthly payroll. What I would then say is for the first quarter, I'm going to go apply for the ERC because I have that greater than 20% reduction. And I can apply for a $5,250 credit, which is 70% of that $7,500 number. And then because I'm taking all that wages, so I'm taking that full $7,500 as ERC analysis, I can't use it for my PPP loan. So when I apply for my PPP loan, I have to then say, okay, well, I don't get any wages. I'm not able to use any of the wages for the first quarter, right? Does that create a problem for me? In this situation, I go into the quarter number 2, I have 14 more weeks of payroll, and that allows me to get full forgiveness. So all in, we get government subsidy on one employee of about $11,500, which is the $6,250 for the PPP money, and then $5,250 for the ERC. So, but if I go for and say for the second quarter, I have, I'm going to use that wages for my PPP forgiveness, then I'm not able to to go for and elect for the ERC credit. So I'm kind of leaving those dollars behind. And you might say, well, why would you do that? And the reason you would do that is because it's the PPP money is more beneficial to you than the ERC money, because the ERC money has a tax effect to it. So really the reality of it is whatever you're claiming for the ERC credit, you have to reduce your expenses. So there's a tax consequence to getting some ERC money. Again, you're still coming out ahead, but it's not as productive as the PPP money. So we would say that from a priority perspective, you want to make sure you're claiming the PPP funds first. Okay, so now let's move to another scenario that kind of shows where we get both. And it's probably more of a relation to the fact that we have a higher comped individual. So first scenario, we had a $30,000 individual, and we were only able to use 1 quarter's worth of ERC money. In this scenario, if I have somebody I'm paying $90,000 to, right? My quarterly payroll is $22,500. For the ERC, I can only take the first $10,000. So therefore, I get my $7,000 of ERC, and I should have about $12,200 of additional wages for that quarter that I can then use for my PPP loan forgiveness. Then I go to my second quarter and I say, okay, I get my ERC again. I take another $10,000 and I have my $7,000 credit. Again, I get another remaining $12,500 for eligible wages. That gives me more than enough to qualify for full forgiveness of my PPP loan. And in that case, scenario 2, we're looking at about a $32,000 government assistance between the ERC and the PPP loan. So the significance in all of this is that we are trying to be very strategic as far as how we go about it. One of the things we want to go to next is some things we want to watch out for. So the first thing we want to keep in mind is at this point, the ERC wages come first. So if I'm going to elect to take my ERC dollars for credits, those wages are then not eligible for the PPP loan for that quarter, or that whatever I use up. And then if we have a delay in our PPP application for number 2, that might be a good idea for us, right? So what we would do is if we can push that loan application out the first quarter, so we know we get all ERC wages in the first quarter, then the second quarter, maybe retake the ERC again, and then we just have that third quarter to use up, the remaining 12 weeks to get our full credit or our full PPP forgiveness. So the longer we can put out applying for the PPP loan, it may give us some additional flexibility here. So that's one thing we want to get in mind, so that if your application's delayed, it might be actually a good thing. At this point, it's our expectation there'll be funds available all the way up until March 31st. So we don't expect that the program's going to run out of money, but obviously we can't guarantee that. So things we just kind of watch over, but our suggestion at this point might be to consider holding off that application if you were thinking about applying but haven't. You want to evaluate, if quarter 1 or quarter 2 will have a greater than 20% reduction. And if you think quarter 1's going to have that reduction, then let's push off maybe the application. If the quarter 1's probably not going to have the reduction, then the timing of the application, might not matter from that perspective. As I said before, PPP forgiveness is more valuable than ERC credit because of the tax affecting, and that you also want to now leverage the ERC, the cost, like the employee wages plus the health insurance costs. Same thing for the PPP loan forgiven program. You want to leverage other costs, the health insurance, the retirement accounts, the PPEs, the rent, the interest, all these things that you maybe didn't include on the first application. When you apply for forgiveness, we want to now kind of, maybe leverage those a little bit more so that we can maybe get the ERC and the loan forgiveness all at the same time. So we're kind of working on that, but we have to keep to the 60% of the payroll costs have to be used for the forgiveness. So we do have that threshold to worry about. And then finally, a disclaimer, right? We just want to make sure that everybody understands that, and I think we're kind of drilling this into you over time, there is uncertainty with some of these things. And the rules keep changing to some degree. from the perspective of, what wages qualify, what's the ordering and that type of thing. So, keep in mind, there's going to be evolutions in this process, but so rushing into things might not necessarily be in our benefit, but we want to know whether it's worth it. And then if we go for it, we want to be certain of what we're going for, and that we've optimized the situation and getting every tax dollar we can. So the bigger thing, go ahead.
No, go ahead.
So the bigger thing we want to worry about is, understanding your situation, seeing what we can do to apply the things to the right periods and get as much as possible. So if I have 10 employees in a quarter, I can, get a credit for $70,000. It starts adding up really quickly as far as the benefit of the ERC program.
So Dan, I want to throw a little curveball into your analysis here and say that if there was a company that did not apply for the first PPP, there is still some availability to apply for both of them. So again, I think this is where timing, you got to kind of lay it out, because remember, you're going to apply for the first draw right now. You would still have availability to get the first draw right now. Then before you apply for forgiveness of that, you have to say that you spent or will spend in your covered period all of that money. And then you can apply for the second draw of the PPP if you meet the criteria for draw number 2. So you want to evaluate, if you did not receive a first draw, that it might be more beneficial at this point to apply for the first draw and then apply for a second draw instead of the employee retention credit. So I think there's a lot of opportunities here for people to be looking at ways that they can get some of these credits. And then possibly under that scenario, if you didn't apply for the first draw, could you amend any payroll reports from 2020 to take advantage of the employee retention credit if you qualified then? So again, a lot of moving pieces to this and a lot of things for people to consider.
Yeah, I mean, we're looking into this for a lot of clients for even 2020. We're not seeing a big percentage of them with a 50% reduction criteria being met, but we have clients that are applying for 100, 200, 300,000 of additional refunds by going back and amending these returns. So the opportunity is there. Unfortunately, we had to have a business with a greater than 50% reduction. So that's not a positive event, but let's try to get what's available to our situation. But in Nancy's situation, where you're applying for this, both rounds, the PPP money is the more valuable dollars. It's dollar for dollar benefit for the most part. And so in that case, you're going to apply for the loan right away. You're going to want to use it up right away. And then you're going to apply for your second right away. And in which case you might not, you certainly won't be able to apply for the ERC in the first quarter, but maybe you can get part of it in the second quarter. And then you still have enough time to work out that second draw, after that period. But these are things that we're trying to be strategic on and working with our clients on, do they meet the revenue? What's our employee situation? What's the credit opportunity? When to replay what and how to refill out the forms? These things all have to go together. So you can have, a payroll service do the 941 amended returns for the ERC, but there's that PPP component to it. And Paychex or whatever payroll service you're using might not necessarily know that situation, and not that it affects what they're doing. It could affect the deductibility of that, or that forgiveness of that PPP money, and you don't want to put that at risk as well. So we need to kind of play all these things together.
Again, remember, the application process ends on 3/31 unless they extend it for the PPP, draw 1 or draw 2. So you still have a little bit of time, but time is critical right now.
Right. Now it ends on 3/31 unless they run out of money, right? And there's
Correct.
about 280 billion allocated to this program. There's no guarantee that they won't run out of money. I don't think they will. But that is a bit of a concern. You don't want to wait till the last minute if you're not paying attention and then see them run out of money, because then you've just lost your opportunity.
Okay, wow, so much information, and the interplay between these things starts making your brain hurt a little bit. But Dan, Nancy, and Eric, as always, a great job of getting through all this information. And you guys also, I know, were answering some questions as they were coming in. I think some people were seeing just the answers, some were seeing the questions too, but we've got a good 10 minutes to do some Q&A, so please send in questions as you have them. We already have had a ton come in, but I'm thinking maybe we spend the first half of this talking a little bit just about straight PPP, and then we have some questions that are very PPP ERC interrelated. So why don't we start with a question that came in towards the beginning. If we have not spent our entire first round of PPP, do we have to use it up for PPP approved expenses before we apply for the second round? Or do we just need to certify it will be used appropriately?
You need to certify that it would be used appropriately. So you need to say that you will use it all, although you have not yet, you will use it all on qualified expenses. And again, when you're doing the forgiveness application, you will have to prove that. So
Nancy, I want to clarify that too, is you have to certify that you're going to use it for approved expenses. Does that mean within the covered period, or just that you're going to use it for approved expenses since you received it?
it's within the covered period.
Okay, so if you have to have it certified that you use it for approved expenses within the covered period, wouldn't the covered period have been ended by now for PPP1? So you either used it or you did not use it.
No, because there are several applicants who have not applied for the first draw yet. So I have a handful of clients that didn't think at the time when the PPP came out that they really had a necessity for it, because they didn't see anything happening in their business, only to find out things slowed down towards the end of 2020, and really in December thought they were out of luck. They should have applied and they didn't. And then when they opened it back up on January 11th, now they can apply for their first round. So there are people that are still possibly applying today for round one. And their 24-week period is going to be from the day they get the money on. So they may fill out an application for the second round, maybe sometime in mid-March. They may not have used all of the first one, but they're going to say, I will use it in that 24-week period. And then they have this second 24-week period, or up to 24 weeks, to use the second draw.
And will that second draw then start a 24-week period that is running concurrently with that first draw 24-week period?
To my knowledge, yes.
Okay.
Again, because we haven't, people who are just applying now, we're not seeing some of these errors or some of the information that the SVA is requesting as a result of this. In reading the information, that's what it appears, that there could be this period of time where you've got one loan, but then you've applied for a second and you have this next 24 weeks. Again, if you've spent the money and you're not doubling up on the wages, it could possibly happen. But again, I think until we start to see some of those applications for forgiveness actually go through, it's hard to say for sure.
Right. Now, remember that the covered period, you can pick an end to the covered period, right?
Correct.
So if you spend all your money in 13 weeks for the first draw, then you can start for spending it for the second draw.
Correct. I would apply immediately.
Okay. Another question that came in was, when would you recognize the PPP loan forgiveness? If the notification of forgiveness was received in January of 21, would the income be reported on the 2020 or 2021 tax return for a calendar year tax payment?
So I think, Lee, the answer to that is it depends. Certainly for federal purposes, there's no taxability of the loan forgiveness, so we're not worried from that perspective. So it refers to like what state specific rules are going to be. And for example, Wisconsin was following what the IRS was going to do prior to the tax bill, which meant that you had to bring up the gate, you had to recognize, in essence, the expenses weren't deductible in the year that you incurred them, if you felt that, or if you believed you were going to get full forgiveness. So I think it comes down to that criteria. If you're really uncertain as far as the forgiveness, it's possible that the deductibility of those expenses were okay in 2020, so you don't have really an income pickup for the states. But then once the loan is ultimately forgiven, you either at this point, the clarification isn't clear whether you're going to have to go back and amend that 2020 return or whether you're going to be allowed to pick it up in 2021. But I think that's more what's going to drive the recognition of when the income would be picked up. For most of our clients, we're seeing that, for example, under the current Wisconsin rules, it would be picked up in 2020 because we expect most of our clients to get forgiven.
Yeah, Dan, I think it does matter federally because picking it up does have a basis increase for tax exempt income pickup for S corporations and partnerships. So I think there will be a discussion that has to be had as far as when it should be recorded as tax exempt income. And that will matter for someone's federal return if there's basis issues.
All right, last straight PPP question before we move on to some ERC specific ones. If someone applied for the newest round of PPP and did it wrong and could have gotten more money, can they modify it?
Yes. Yes.
Great, I like those fast answers.
You
got
can
two more
make
questions.
changes. You can make changes to those applications. So ideally, I think your best course of action is contact your bank and determine how you can adjust the application.
Okay, so let's move on to some ERC specific questions. We've got, would you still prioritize PPP funds over ERC for nonprofits considering the lack of tax impact?
Yeah, I guess in that particular situation, right? If I'm just trying to optimize the dollars that I'm going to receive, right? So if the tax affecting goes away, then we're just looking at optimizing the amount of dollars that I can receive. And so I think it just requires us to model out, where that qualifying expense is going to be best used. And, we got to also keep in mind that we might have a reduction in employees that might create a percentage of the qualifying wages that aren't, able to be forgiven or used in the forgiveness process. So my analysis was that we had no reduction in employees when I ran my scenarios, but that can also require us to extend or need a longer period of time, which could compromise whether the ERC and the PPP can actually work together in a given period.
Okay, great. All right, at the risk of being self-serving, we did have a question about how do we contact you to have a quick review of our situation. Call me. My contact details will be up soon if you're not a client. If you are a client, call your SVA contact. Lots of other questions coming in, guys. Let's see, there are no submission requirements for the ERC when filing the 941 of your calculations. Do you recommend just saving the file in case the IRS needs proof of your refund?
I think you want to save all documentation that you've used to calculate any of these credits.
Yeah, and I also want to add, I think Eric was talking about the necessity questionnaire earlier. And again, we recommended for a lot of clients them to document what their situation was at the time they took out the loan, right? Remembering that narrative real time versus trying to go back and tell a story. We may miss components of it. So I think this really goes to what Nancy said, is keeping those documentation, really documenting our position and kind of making sure that we have the information we need to represent, provide support, whatever it needs to be done in order to safeguard that position.
All right, and knowing we're getting close on the end of time, let's take one more ERC question. If you've applied and have or will receive the second round of PPP loan in February, can you use the ERC for the wages paid January?
Yeah, so as we understand the ERC rules right now is that you in the ordering rules, the ERC wages come first. So if you're going to apply for the ERC, those wages would be first, and then whatever's left if there was wages left in that quarter, right, then you could use it for the PPP funds. if there isn't any wages left after using it up for the ERC, you just would not get any PPP qualifying wages for that period. Might run your covered period out a little longer. Now there is, again, in all disclosure, will that change, right? Is the IRS or somebody going to say you can pick and choose, what wages you qualify for when? That is not currently our understanding of the availability, but that could be something that opens up. And then, right, we could just take January's and pick up the rest of February and so forth for the PPP money. But right now, we don't believe that that is a possibility.
And
Yeah, so
Dan,
I was going to
as
say,
far
I
as-
don't necessarily agree with Dan on that. It might be true, but I would say that for the same employee, if you have, the first 10,000 of wages you can use for the ERC and the balance in the quarter for the PPP, I think that works. The question would be, let's say, well, I only paid the person 3,000 of wages in January, and the rest of their wages for the quarter I want to use for the PPP. I don't know, you might be able to do that where you say, we're just going to use 3,000 for the ERC, and then the balance of those wages we're going to use for the PPP. Nancy, sorry, I was interrupting you, but I wanted to get my point in.
I just wanted to clarify real quickly too, that there's also that FFCRA in there. So I don't know that we touched on that anywhere in this presentation, but the ordering really is the FFCRA or the Families First Corona Act. Those wages that you got a credit on first, those come first. So it's the FFCRA, then the ERC, then the PPP. So not to confuse people even further, but there are some ordering rules if you had some sick pay in addition to all this other stuff.
Right. And those are good credits because they're 100% of the wages you paid for your sick pay. So using the FFCRA first is fine.
Yeah, so much to think about. Hopefully you all came away with a better understanding of these than when you started, but it is very, very confusing. So again, just please reach out to us with additional questions. I think we got to maybe 10% of the questions that came through. We did our best. So as we wrap up, I just want to let you know you can visit svaaccountants.com/hub, where the recording of this webinar will be available, as well as our PDF overview of some of these topics and other information that we have. We're coming out with biz tips and new information as it's available. And I just want to remind you all that the SVA team is only a phone call or an email or a Zoom meeting away. So if you're a client, reach out to your SVA contact. But as I mentioned just a few moments ago, if you're not a client and you need some help working through these things, please reach out to me and I can get some details and we can talk you through how we can help you through this process. Hopefully you can join us next time. We don't have our next webinar scheduled just yet, but believe us, it will be there when it's necessary. We'll be here for you. So reach out if you have questions. If not, thanks for joining us today and be well. Bye-bye.
Bye, everybody.